Hello everyone, I'm John with JP Strategic Investments, and today we're going to be talking about Tesla's announcement that they will be raising another $5 billion in a new share offering. I'll go over the details of the offering, why Tesla is doing this, and how it could affect their stock leading up to their inclusion in the S&P 500. So let's dive right in. So first of all, I do want to say that I kind of called this back in November just after the announcement that they were going to be included in the S&P 500. I posted on our Discord server that I thought it was very likely that Tesla would raise capital before the inclusion date, and I detailed why in a video on the possible scenarios that could play out leading up to Tesla's S&P inclusion. So if you haven't already watched that video, be sure to check that out, and if you're interested in getting real-time analysis and trade notifications, definitely join the JP Strategic Investments Discord server. That being said though, let's get into the details of this capital raise. So early this morning, Tesla announced in a filing that they will be issuing new shares through an at-the-market offering program raising up to $5 billion. So what this means is that Tesla is going to be issuing these shares at the current market price at the time of the offering. So from the filing here, it looks like the issuing of these shares will happen at several different times to several different investment banks, but at each time the banks will be buying the shares at the current market value. So Tesla is doing this to take advantage of their skyrocketing share price, and they will most likely be using this money to accelerate the construction of their new factories in Berlin and Austin. I also wouldn't be surprised if some of the money went to their new battery program. Obviously, the faster they can get that up and running at volume, the faster they can take advantage of all the cost savings that they mentioned on Battery Day. So the next question is how this will affect their stock. Well, as you can see, it's slightly down on the news, and this is most likely because while it's a good thing for the company and arguably a good thing for long-term investors, it's somewhat negative for short-term traders who have been flooding into the stock over the past few weeks. Let me explain here. So I just mentioned earlier multiple reasons that this will help Tesla. But along with their ability to increase capital spending on new factories and battery programs, this also bolsters Tesla's balance sheet and further improves their credit rating, allowing them to issue even more debt if necessary. And while the capital raise will slightly dilute current shares, it will be a minimal effect compared to the benefits it offers to the company's future growth. For short-term traders though, this isn't necessarily a good thing. If more shares are on the market, then that will decrease the level to which the S&P inclusion will push up Tesla's stock. This drop in the stock price we're currently seeing right now could be a result of short-term traders exiting their positions and taking some profits here. Overall though, it won't have a huge effect on how the stock will be included in the S&P 500 and its larger effect on the stock price, so that's why I don't think the stock is down too much on this news. So these are my thoughts on Tesla's capital raise. I hope you found this analysis helpful, and if you did, please consider liking and subscribing, and have a great day.